Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is my passion, such as our 21 Spine ES mean reversion systems, and of course our amazing KISS systems. You'll all find them in the systems section here. By the way, guys, markets had a heck of a correction, as you know, and our systems have done very well. For example, our mean reversion systems, we have 21 of these. You can see these all scaled into that pullback a little bit, and they exited last week for very nice winning trades before that next decline. By the way, the middle one here, the QEBTS, is actually looking to take a new long trade. If we get some more downside early this week, which I think we will, we're looking for that. Here's the stats on that system. Profit factor of 20, which is awesome. 90% winning trades, 153 trades, so it's got a lot of history. Approximately 11 days on average that the trades are in. Also, our KISS systems have nailed it. They've done their job protecting you. Here's the QQQ KISS system right from our website in the tables. You can see, KISS system, remember, goes long. It gives you that smart trailing stop exit. And you can see it would have exited a couple weeks back. Not at the highs, never going to catch the high. But it kept you out of a lot of this correction. So they're doing their job, keeping you protected. I do think we're getting close to at least some sort of trade low. Not exactly maybe the bottom. We may still have some more downside early this week. But here's an interesting chart. It's the VIX to VXV ratio. So that's the VIX, you all know the volatility index. The VXV is the 3-month VIX. So when you do the ratio, quite interesting, whenever this ratio spikes way up here, notice how these have occurred all near major bottoms. Sometimes, a lot of times it's a week or so early, but the fact that it's spiking up here now means that we're probably getting close to something, okay? And last thing, guys, like I said, if you're just on YouTube, you haven't subscribed, please consider doing that. We have 5 detailed newsletters per week. You get access to our awesome trading systems. You get notifications for that, active community, all kinds of stuff. Just simply click the enroll area, and once you do that, you'll have a sign up page here. Our best membership is our 6-month membership. All the memberships are the same here, except the professional, which I'm not going to talk about. But all the, the quarterly, monthly, 6-month, they're the same. Give you access to everything. The 6-month, you get roughly 50% off versus the monthly. So it works out to about $50 a month, whereas the monthly is almost $80. So the 6-month is the best, and that's what, say, 99% of our subscribers use. Okay, so let's go ahead and get back to this newsletter at hand. This is our backend recorder for our standard website subscription service. We have the newsletter that's built into, the browser, and I'm going to go ahead and get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend so far. It's Sunday afternoon, about 3 p.m., August 4th, and this is the very comprehensive weekend newsletter from Breakpoint Trades. If you happen to be new to these, the weekend newsletters are quite a bit longer than the intra-week newsletters because, we cover things more broadly, look at the bigger picture charts as well. And the weekend, you have time to peruse. So we cover a lot of things here. You can see the table of contents divided into 6 major sections. Same general theme as I always keep. We have our first opening statement, my thoughts on the market. I'm going to give you a summary on that. We'll, of course, cover all the charts in detail later on. Then I'm going to talk about some of the mechanical systems. The mean reversion systems for the Spine ES nailed it. They bought this pullback in the market. They exited on that bounce we had early last week for nice trades, and they're all in cash. That said, if we go lower here, I'm looking at some of these systems may trigger again, which I think that's a great trade. Then we'll move on to the general market indexes. Again, we do a top-down approach on all the major indexes. We'll look at a few indicators, the VIX, stuff like that. I got some pretty neat indicators tonight, such as the VIX VXV ratio. Also, we'll look at the major sectors. We'll look at crypto, Bitcoin. That everything's selling off there. U.S. dollar down 1% for the week. While we saw an 8.4% drop in Bitcoin, nearly all the commodities were down. So, for example, crude oil down 4.7%, uranium down almost 11%. Kind of had a weekly head and shoulder look to it. Gold, though, bucked the trend, up 3.7%, likely due to all this uncertainty and, of course, all this crazy money printing. Again, the market's had a pretty good correction here from the mid-July highs. And honestly, from a seasonality perspective, it was topped out to a very similar time frame from last year. If you recall, in 2023, the market also topped out in July. Now, it ended up being about a week and a half later than this year, but pretty damn close, close enough for government work. And remember, that correction lasted until October of last year. But we did have a bounce along the way. And again, S&P and Dow lost about 2.1%. NASDAQ lost 3.1%. Now, the Russell small caps, man, they really cratered. They were down almost 7% for the week. And as you'd expect, big declines in most of the sectors, 9.7% for the semis, 7.75% for banks, while some of the defensive sectors were up, such as utilities, up 4.8%. All right. Anyway, let's go ahead and get started here with the charts. So the first chart here, I'm just going to show you what I'm looking at for the market this week. This will all be covered later on, but sometimes it takes a bit to get there. So those of you with short attention spans at least want to cover this briefly. So here's the 2-hour view of the S&P with a potential count. We have this as an A, B, C down, and you can see that rally that made a lower high. It stalled that wave B high in that supply zone we talked about. We also filled that open gap. We're moving down. Now, as a wave C, this should be 5 waves down. And to me, it looks like it's more of a wave 4 bounce we're maybe experiencing here. That's why I think this is probably not the low, and then maybe we come down one more time, ideally. That would be into this next demand zone. You'd have a wave 5 of C, and I think that's where you get your better bottom. And again, mean reversion systems, they start buying that. I think that's a pretty good entry for them. Chart number 3, here's a 30-minute view of the S&P. So just shorter term. Again, we had a huge breakdown on Friday. So you can see, again, right now, we just have 3 waves here. More looks like an ABC of 4. So if that's the case, wouldn't be surprised to see another move down in wave 5 to complete that. So that's what we're looking for. And finally, guys, here's a very cool chart. Steve posted this on the weekend. I modified it to make it pop more. I think I'm pretty good with the visuals doing that. But so the VXV is the 3-month VIX, while the VIX is, the standard VIX. So as a ratio, it's quite interesting. So what we've noticed here is whenever the VVIX ratio spikes to these really high levels, like we are now, notice it tends to correspond with all these major bottoms. Yes, sometimes it's a week or so early, like you see here, a few days early, whatever, but usually right near some sort of low. Just like this one back here, you had a spike here, and technically I could draw a green line here, and that would be right at that low. So the fact that we're seeing this now shows that we're likely close to some sort of decent trade low bottom. Okay. Next, let's talk about the mechanical systems. So apologize, slides got out of order there, so refreshed. So let's talk about the mean reversion system. So here's the mean reversion systems that triggered during this correction. And you can see we had several of these mean reversion systems, anywhere from the trend pullback to the QE BTS, S-trap, whatever. All these had excellent winning trades, as you can see. Mean reversion systems, remember, they're buying pullbacks and uptrends, right? So this year they haven't been that active because the market's been so strong, but when you get these nice corrections, they start to come alive, and these had very nice trades, all made money, especially on the second entries. But the reason I'm showing you this is the QE BTS here. Now this exited the best out of the systems. Remember, we run this on both the SPY and MES futures, okay? Again, if you don't trade futures, that's fine. You could always substitute it in place of, an ETF that follows the S&P. But anyway, these exited, while all these other systems exited on Wednesday at the close, which were nice trades. The QEBTS exited on Thursday morning like a boss. The market actually gapped up a little bit, got better prices, and boy, what an exit as we dumped hard the last couple days. Now, the reason I'm showing you this, guys, is because should we get maybe another low on Monday or something, or Tuesday or whenever, I think this system will trigger again. Of course, if that happens, I'll send out the trade notification to all the subscribers, because I think that'll be an excellent trade. Here's the statistics for that QEBTS system. Profit factor of 20, which is awesome. Remember, profit factors of 2 or 3 are considered good. 90% winning trades, 153 total trades. So you got a good population there. I see guys with systems that have like 8 trades, and it's like from a statistical standpoint, it's kind of meaningless. Not enough data points. A statistician will laugh at you, but that's plenty of data points. Very nice profit curve, and the average time in trades about 11 to 12 days, as you can see. Okay. Next, here's the system trades this year. Again, we closed out those recent ones, which all made nice money, as you can see. All made. Look at the ES, MES. Look at the SPY ETF. You can see the QEBTS, which closed out on that Thursday morning. So again, systems here, they've done about 20 or so trades this year each for SPY and ES. They're not as active as they were the previous year, or especially 2022, but they've come active here alive. Next, the other thing I want to comment on is our KISS systems. The KISS systems are trend following, their opposite of mean reversion, and kind of as you'd expect, most of them are in cash, so they've been doing their job. On the BPT basket here, the only thing you got long here is AT&T, which is still up. Meta's down a little bit, and so is ABG, but otherwise everything's in cash. Again, the KISS systems have done their job, especially on the indexes. Those of you who may utilize this for 401k management, where you want some sort of protection. So here's SPY right from the KISS tables. You could see it exited a couple weeks ago. Yes, didn't catch the high, but it exited a couple weeks ago, and that allowed you to avoid at least half of this correction. If you wanted to, you could buy back soon again, and you'd be better than someone who just bought and held, right? That's the beauty of the KISS systems. Here's the QQQ from the KISS system table. Same thing, it exited nicely up here. And so even if you were to buy it now or soon, you'll definitely have been much better than if you just held it. And that's the beauty of the KISS systems. All right. Next, let's move back to the general market. So here's the index sector table, what transpired last week. Again, big down days, Thursday and Friday, as you know. Look at Friday, Russell down 3.5%, NASDAQ down almost 2.5%. For the week, big losses here, especially the Russell down 6.8%. As far as the 21 market sectors, the majority were down, and there's some big losses here, like semiconductors down 9.7%, oil services 8.3%, banks 7.75%. So big losses here. A couple bright spots, obviously, were some of these defensive areas, such as utilities up 4.8%, drugs, healthcare, biotech, and communications or real estate. Well, that's been rallying because of the drop in rates. US dollar had a big pullback last week, down almost 1%, down 1% alone on Friday. Bitcoin had a big correction, down 8.4%. That started leading down before the market sold off. It tends to lead. And as far as the commodities here, bloody red. Most of the commodities were down. Index was down 1.5%, but honestly, a lot of these other commodities were down quite a bit, like crude oil 4.7%, natural gas 4%, uranium 10.8%, agriculture 2.5%, etc. Wheat was a bright spot. Precious metals, gold up 3.75%, likely due to the falling dollar and uncertainty. That said, the stocks are really showing some warning signs here, so I'd still be a little cautious with gold. And as far as the bond market, look at the big drops in the 10-year, 30-year Treasury yield. So what's happening in the bond market is playing out as I posted months ago. I was predicting a sell-off in rates, and that has transpired. Next, item number 12 shows the economic news calendar. Remember, we're still in earnings season, guys. Obviously, not as much news here on the week. ISM here on Monday. That's a big one. S&P PMI final. Various things here, various earnings, and of course, any geopolitical stuff that could, hopefully nothing escalates over there in the Middle East, with the Israel-Hamas war, so etc. Next, talk about a couple other things. So Friday was the jobs report. Here's the unemployment rate. This is going back to 1985. Again, I've shown this chart ad nauseum, but I just want to show it again. Unemployment rate ticked up on Friday. It is now 4.3%. Okay, remember I've been saying about this, that the unemployment rate The 5 and 13 EMA crossovers work excellent for general buy and sell trends. Whenever these moving averages cross, tend to produce moves that last, 2 or 3 years or longer. Why? It's because it's hard to turn. It's like turning a barge. It's not like, turning a tiny sports car that can turn on a dime. This requires a lot of room. And so when it changes direction, it goes in that direction for a long period of time. And these moving averages crossed in late 2023, guys. So this signaled early, almost a year ago, that the unemployment rate was going to start to go up. And again, if you look at the trends here, don't expect this just to reverse anytime soon. This is likely to go up now for a couple years probably. And we'll see a recession, stuff like that. Maybe we'll see a bear market eventually. Here's the yield curve. This also had a big jump last week, up 1.8%. It's now 0.98. Remember, over 1, it is no longer inverted. This has been inverted now I haven't updated this since July, but 760 plus days. Second longest in history. Typically, if you research the yield curve, typically when it goes, after it's been inverted for a long period of time, usually when it goes back to a non-inverted state, that's typically when you get your official recessions. And that's why I've been predicting a recession. That, and along with the unemployment that we're seeing going up, and it should continue to tick higher. Okay, moving on. Let's talk, we had a lot of big cap tech earnings over the last week or two. They've all been smashed. Here's Microsoft, pretty big correction from the July highs. It is now down to this trend line from the January lows. You also have the 200-day moving average. The bull's hope here is some sort of ABC. It is nearing a support finally. Chart 16, here's AMD. AMD has had a heck of a correction from the March highs. Stalled at that supply zone there in July. There's a little demand zone. If this is lost, though, this would be your next big demand zone down here. Maybe a okay buy down there finally. Chart 17, here's Meta. Now, Meta's been bucking the trend. You can see it did pull into a demand zone where it bounced off of. So this one's holding up better than the rest. Now, Apple's holding up pretty well here too, but looks a little vulnerable. Story on the weekend, Buffett has reduced his Apple earnings by 50% and almost has a little slanted head and shoulder look, doesn't it? Amazon, chart 19. This also got killed on earnings, gapping below its 200-day moving average. There's an open gap here, which it almost filled on Friday. So maybe that marks a low. I would have preferred it filled the gap, but it got pretty damn close and formed a big hammer doji. And Tesla, which Tesla reported a while back, also been declining. Nice correction from those highs. Now there's a demand zone down here. You have the 200-day moving average. So those of you who may be Tesla fans, maybe watch that area. Also, remember a few weeks ago, I listed TSDD. That's the Tesla Inverse ETF. I'm sure Musk hates this ETF. He's kind of like Trump in a way. He gets rattled easily by, if something is against him, but whatever. I'm not going to go way into that, but I said this looked bottoming back in mid-July, and it's moved up nicely. All right, guys, enough of that. Let's move to the major indexes finally. So chart 22, here's the weekly chart of the 5 key major indexes, the Dow at the top, S&P, now it's notice middle Bollinger Bands. You had bearish evening star patterns on the NASDAQ, triple Qs. You can see the doji there. That would have been your trigger for a short with a stop at the high, and that's been playing out. And there are small caps below, absolutely smashed. Next, chart 23, here's the Dow. Remember, we don't show the Dow too often. It's 30 stocks, but earlier last year, broke out of a big coil, moved up, higher low. Here, it's kind of channeling, but there is some big MACD divergence here to be aware of that's forming. Here's the daily chart. Again, so far, nice big three-wave pullback off those highs. Next, chart 25, here's the KISS systems. All right, for the major indexes, these are the weekly systems. Now, the weekly systems are still technically long. Now, the Qs are really close to their smart trailing stop there, 448. Remember, the weekly KISS systems give a lot of room. I generally don't use the weekly myself. I'm a shorter time frame than that, but some folks might use those who are retired and they don't want to do much. The weekly KISS systems can stay in trend sometimes for a year or two. So they require very little maintenance, and they still offer that protection, but the stops are a bit wider. You can see we had the DeMark 9s on the S&P and the triple Qs about a month ago, and that marked a high. Next, chart 26, here's the S&P daily KISS. As you know, we had those DeMark 913 a couple weeks ago, which marked that high. And interestingly, the last few months, those DeMark 913 combos have been pretty good. Anyway, nice correction here. And this here is the weekly ATR. So we're getting close to that. That was previous support back in April, as you can see. The thicker one here is the daily ATR. So this is the weekly. Chart 27. Here is the 4 time frames. So here's the S&P, here's the daily up here, which we just discussed. You can see how the last bounce stalled at the ATR. ATR's resistance, obviously, in all these time frames. Now, we did get a little DeMark. We did get a cycle support buy here on the 130 minute on Friday. We'll see if that leads to a bounce or not. And on the 78 minute. Next, again, as I already discussed, these are one of the options we're looking for. Here's the SPY 2-hour chart, which I covered in the opening newsletter. So to me, it looks like some sort of ABC correction. This was a perfect 3-wave ABC of B into the supply zone. We filled that gap. We're moving down. Wave C should be 5 waves. Right now, we only really have 4 perhaps. So that's why it would be more ideal to get one more move down into this demand zone for a 5. I think that would be a pretty decent trade low. You can see you got also your volume by price support there. Chart 29, here's a 30-minute chart. This breaks it down into shorter term. You can see how that little bounce we had on Friday looks more like an ABC. It's only 3 waves, so more indicative of a wave 4. Doesn't mean we can't push a little higher on Monday, but ideally come down one more time. And chart 30, here's the half-day chart. This is another breakdown of that wave count. Again, ABC, 1, 2. Now, this would suggest that ending diagonal on the daily, which I'll cover a little bit below. This would lead to a little deeper correction, but under this, we would soon see a wave 4 bounce, stall likely at one of these fibs here. Then we go down again in a 5 to complete this A. Okay. Chart 31, here's the weekly S&P. I was wondering where this was. This should have been up higher with the weekly KISS. So here's the weekly. We had a MACD divergence on the weekly, which is obviously playing out. There is a demand zone in here, which we're just starting to get into. So let's see if that can start offering some support soon. Chart 32, here's the daily view of the S&P, this channel I've been showing. Okay, we leaking oil a little bit below the channel. Now there's a overlap here, which I'm not going to get into right now. I'll let Steve do that, but that's an area to watch. You can see your moving average ribbon is still bullishly stacked, but pinching here pretty good. Chart 33, here's that ending diagonal scenario I mentioned above, where we get a deeper wave 4 pullback. Okay, so that's, again, still another possibility that could be unfolding. Chart 34, here's yet another S&P chart. Now here is some cycles, potential cycles. Again, I wouldn't put too much into these, but I thought it was interesting. Markets move in cycles, as you know, and I have a larger cycle and a smaller cycle, kind of like a fractal here. So, these have been pretty good. They're not perfect, but been pretty good at marking tops and bottoms. And this was suggesting a top here fairly soon. It's also suggesting maybe a trade low here soon in early August. Right, but then you get a bounce and maybe get another move down, and it's suggesting another major inflection point there in early November. Again, as I always state, draw trend lines on the RSI indicators. They can give you excellent triggers. This, you can see, had a nice clean trend line in the RSI of 14 and 5. Breaking that would have given you an objective short trade. Chart 35, here's 2-hour view of the S&P, nice clean chart. Again, like I said, so far we have we're counting this as an A, B, C. We're working on this C. There's a big demand zone down here. There's also an open gap way down here. If that leading diagonal scenario were to play out, maybe we go down to there. But for now, this is the biggest support area in here. Chart 36, here's a 2-hour view showing this ABC X wave down. Next, chart 37, here's the triple Qs KISS system. Again, excellent job from the website here, exiting back there a few weeks back. Now, interestingly, we also had a DeMark 9 at those highs. Interestingly, this one is below. It's lost its weekly ATR. Shows you the weakness. Moving average ribbon is now bearishly stacked, so you can see the Qs are much weaker than the S&P. You have the 200-day moving average here. That also could be a target over time. Chart 38, here's the 4 time frames. Daily up here. Half day, you can see we stalled right at the ATR bounce into Thursday morning. That's resistance. You also have your moving average ribbon pinch there. We do have an end of bull cycle, support long cycle here on the 130-minute and 78-minute. So we'll see if we can lead to a bounce on that soon. Moving back to the standard chart, chart 39, here's the weekly triple Qs. So far from that evening bearish morning star pattern from that doji, you triggered right here around 490 would have been your short trigger. Excellent trade so far, as you can see. Nice correction. Chart 40, here's the daily triple Qs. So you can see we rallied up, lower high last week, pulling back into this weekly demand zone area. There is a little RSI divergence, positive divergence for now. That could be lost on a further move down. There's, of course, this big open gap down here, which, also could be a target. It's near the 200-day moving average. Chart 41, here's a zoomed out view of the triple Qs. So again, as you know, we lost that uptrend line from the October lows on Friday with that gap down. We had a bearish symmetry break on that first sell-off, so we were looking for a lower high, which we got. You can see it tested that little extended trend line. Okay, so whenever you have a symmetry break, you can see this was about 48 points. It was larger than all these previous pullbacks in this entire uptrend from the January 2023 low. So that was important. So you got a lower high and then a sell-off. Okay, but you can see that longer term uptrend line comes in quite a bit lower. You have the 200-day moving average above. I do believe those areas will hold. Chart 42, here's a 2-hour view just showing this clean channel. Okay, there is a little MACD divergence here. It's not a great divergence, but we do have some divergence there. We're also a little demand zone right in here. Again, this is your downtrend channel. Bulls ultimately need to get clear this downtrend channel, which is a ways off. Chart 43, here's a 60-minute view. I'm about to remove that, but let's go ahead and move on. Next, chart 44, here's IWM small caps. This is the weekly chart, down 6.8%. So quite ugly, just boom, basically smacked back to the back test that broken coil. Stalled in that supply zone that we had marked ahead of time. Here's the daily IWM. You had a nice RSI divergence there at the highs here, and you can see that led to a big sell-off. We're now basically back testing that coil. Could be an area to watch for a bounce soon. Here's the 2-hour view. You can see that kind of wedging pattern, RSI, MACD divergence you had, and then just a swoon down. Now, someone asked me about this breakaway gap. Again, this was a great breakaway gap here, guys. You had a coil. You gapped over a downtrend line on expanding volume. This was a good buy if you bought it even after the break. But obviously you needed to take profits. You couldn't just hold it indefinitely, It provided you a nice long trade if you took your profits. All right, guys, that does it for the major indexes. Let's go ahead and move on. Going to look at a couple indicators. Here's the VIX. So the VIX closed way outside its Bollinger Bands again, though it was off the highs. It was up here near, up in the upper 29 area, almost at 30. So had a big spike on Friday. Chart 48, here's the S&P with the Hindenburg. You may have heard of the Hindenburg omen. And remember I showed this a few weeks back that we had 3 Hindenburg omens this year. And a lot of times you need a few of them in a row to get, a true one. There's a lot of false signals you get. But obviously, finally, that Hindenburg's finally playing out. Next, chart 49, here's the VIX to VXV ratio. Remember that's the 3-month volatility VIX to the standard VIX. And I already covered this above, but the fact that this ratio is up here tells me that we're close to some sort of trade low. You can see in the past here how really good this has been. Sometimes it's a few days early, a week early, but usually this catches those pretty good bottoms, and this has spiked up. You can see back here in October, in fact, I should have drawn a second vertical line. It would have showed up right there at the lows. And you can see technically you have two spikes here. So this is suggesting some sort of trade low soon here. Chart 50, here's the triple Qs versus the Japanese yen, the so-called carry trade, where you borrow cheap money in Japan and you invested it over here. So the carry trade has directly benefited the NASDAQ. You can see inverse correlation there. So when the yen has started to rally strongly, it perfectly corresponded with a sell-off in the triple Qs. Remember, I've been bullish on the yen for over a month, and that has played out. I'll cover that below. Next, chart 51, here's TLT 20-year bonds. Remember, we've been showing this beautiful coil pattern for weeks. Had a big breakout last week, up 6%. This just was an excellent long. You could have bought this with a stop right inside, below the lower trend line. And this looks honestly like it wants higher still. Chart 52, here's TMF. That's the triple leveraged ETF for TLT. I gave this as a trade idea last week on Monday, and boy, did it play out. Up 9% alone on Friday. So it's up about 13% from its entry on, if you took that on Wednesday or Monday or whatever, or Tuesday. So hopefully some of you guys followed this because it's been an excellent trade. Next, chart 53, here's the 10-year Treasury yield. Finally busted down, and I was expecting that. Now there's the 200-week moving average there. We'll see how it does there. Chart 54, here's the daily. Again, it just absolutely cratered the last couple days. Look at that. It is quite oversold here. Short term, look at the RSI 14. Last time it was oversold was back there in December 2024 where it bottomed. Here's the 10-year Treasury yield again. I added this scenario months ago, guys. I was projecting these trend lines. I haven't adjusted these. I was postulating a sell-off in the rates, and that's what we're getting. Now I'm expecting a higher low. This area here is now major support. It used to be resistance. It's now big support. So I don't think it goes below this area, and I think it eventually rallies up again. Here's the 40-year chart going back to 1980. So in the secular bear market and the 10-year, which is over after we broke that channel. But, this has also played out well. It stalled at the 5% area where I was expecting in 2023. And I was expecting to pull back, and we're getting that. I do expect it to hold this area, and eventually they'll rally up again. Maybe that'll correspond to the next bear market. All right, moving on to the market sectors. We'll cover a handful of them here. Here's XOK Technology. Again, follows the Qs down as well. Tested the 200-day moving average, formed a doji. There is an open gap here, though, so it may want to fill that. Be aware. Chart 58, here's semiconductors. Again, down almost 10% last week. Hell of a correction. It is into a demand zone here. You have the 200-day moving average, so volume's been picking up here. It is an area to watch for potential low. Chart 59, here's the banks. Also dumped hard last week. It was a very strong sector, but you can see it dumped hard the last few days. Here's a trend line support down here to monitor. Chart 60, here's KRE, regional banks. Remember we said this was very toppy. We had some divergence, and boy, is this starting to play out nicely now. Now the trigger, though, wasn't really the daily for me. It was this 2-hour chart that we've been showing. You had a little double top there, divergence. You can see on the MACD, and boy, did this ever play out for a nice trade. Chart 62, here's the transports. Remember they rallied last few weeks back into the supply zone where they stalled out. Then finally they lost that support area. Now there's a demand zone down here. Maybe that's a target. Chart 63, XLI, selling off here as you can see. It was a strong sector as well, but it too is getting taken to the woodshed here, which typically happens on these big sell-offs. Here is the weekly chart of XLI. Notice you have a pretty good RSI divergence at those highs on the weekly and MACD. Chart 65, IYR real estate. Remember this area has been strong, especially with those sell-off in rates. They've been front-running that. Chart 66, utilities. Basically one of the strongest sectors last week. Remember this looked bullish and it broke out last week. A trade idea we put out in the utilities was NEE. beautiful coil. You can see it's given a trade. I know some of you took profits at those highs. To me, it looks like a cup and handle. Maybe it stalls here and then eventually breaks out of it. So to me, it still looks good if you hold some of it. Driver 68, healthcare, still strong, holding this uptrend channel, one of the defensive sectors. Driver 69, XLE Energy. Now, energy area sector is weak. Basically, had a perfect three-wave bounce, and that's it. Remember, a three-wave bounce is a reflexive bounce, not impulsive, so not surprised to see us melting down. Plus, the crude oil is weak. Here's oil services, again, down 8.3% for the week. Still in the coil pattern. Driver 70, XOP, S&P, gas, oil and gas exploration, big old dump here. Again, the oil energy stocks, when they get oversold here, though, I think they're going to be interesting, but right now they are quite weak. Driver 72, XOP, consumer staples. Now, this continues to be a strong sector. Remember, this is also a defensive sector, and it's holding up well. Driver 73, FXI, this is the Chinese market. Still monitoring this. There's a big support zone down here. Let's see if it can hold that area. And here's the leveraged ETF, yen. It's into this support zone now, but you need a trigger of some sort. All right, moving on to commodities, which were mostly weak, except gold. And so here's DBC, the index. It's sold off the last 4 weeks from the upper coil line. It's now testing this coil line. Is it going to hold? We'll see, but definitely indicative of weakness in the economy and around the world, particularly China. Here's DBC, the daily. It did bounce off this demand zone early last week, but got smacked right back to it. That said, it's still in the demand zone. There is some RSI divergence down here, and there is some divergence on a 2-hour time frame. So here you go. Here's the 2-hour time frame. Notice this MACD divergence here. Stochastic's oversold. So it kind of looks maybe like a low-risk bottom fishing play if you're willing to put a stop on it. Driver 78, here's crude oil. Again, down 4.475% for the week. Leaking oil here, slightly breaking this coil. You can see it stalled at the coil in early July, which I talked about. We'll see if this can hold or not, but not looking pretty. Driver 79, here's the daily. Boom. Driver 80, here's natural gas. Big down week as well. I'm still monitoring this potential wedge here, but again, this is one of the toughest things to trade, guys. They call natural gas the widowmaker because it's so hard to trade. So just be aware. There's a wedge here, some divergence that I am monitoring. Driver 81, copper, has had a hell of a sell-off since the late spring. Man, that's perhaps indicative of weakness in China. It's now down to its 200-week moving average. Driver 82, here's the daily. It is down into a demand zone. So I do think it could be worth a shot as a long in here. You also have a big support trend line here, etc. The 200-day moving average. Moving average ribbon's pretty wide here as well. Driver 83, here's copper, the ETF, CPER. It's right into this area. Potential wave C. I own a little bit of this just as a bottoming play. Driver 84, DBA, agriculture, also quite weak last week, down 2.5%. So far, you have 3 waves to the downside. Had a big move early this year from that cup and handle, though. Hopefully you caught that. Driver 85, here's DBA in the daily, breaking a little coil. Now, there's a big demand zone down here and the 200-day moving average. Should it get there? Driver 86, wheat. Now, wheat was up for the week. Remember, I've been on this. This is a major support going back to 2020. So I said this looked like a low risk if you bought this, a week ago or so. Here's the daily. Been showing this wedge with MACD divergence, RSI divergence. And you can see it's trying to break out of the wedge here. I've been long this, giving it room with a stop at the low there. I'd like to see a further move up, confident break out of the wedge, especially a symmetry break. I'd like to see a rally out of here larger than this last bounce. That would be a bullish symmetry break and would lead to a higher low. Uranium got nailed last week, down 10.8%. Kind of had a slanted head and shoulder pattern here. I called for a bull market in uranium back in 2020, which it played out. Otherwise, this is the demand zone here, and you have a long-term trend line from 2020 down here. Driver 89, here's Bitcoin. Big dump. This one shows us down actually 15% now. So it's down more on the weekend. So perfectly pulled back right from that upper trend line. Still potential wave 4 here, but Jabber 90, here's Bitcoin on the daily. Again, big pullback. Now we'll see if it can ultimately, if it pulls back more, if it could find support in that lower trend line again, like it did last time. Jabber 91, here's the US dollar weekly, big sell-off. You can see it's confidently breaking this quote of the downside. The bearish view on the dollar here, guy, would be a wave 3 down. Jabber 92, here's the daily. Okay, big sell-off on Friday, down 1.2% alone. Jabber 93, Japanese yen. Remember I talked about that carry trade. Look at the yen here, up 4.9%. That's a big move for a currency, guys. And remember, I was bullish this weeks ago. I've been covering this. So if you bought this, you've done well. Congrats. Jabber 94, here's FXY, Japanese yen on the monthly. You got a beautiful falling wedge, RSI divergence. It's breaking out of this wedge now. I stated this could be a good longer-term swing trade. Moving to precious metals, gold is holding up decent. It was up for the week. That said, you can see the way I drew this. First off, it held that last demand zone on that pullback. But that's your big support now, guys. It could be wedging here. My concern a little bit is the stocks look quite toppy, and they tend to lead. But clearly, gold is holding up because of all this uncertainty, the sell-off in the dollar, all the money printing. So anyway, but Jabber 96, here's GLD, the ETF. Jabber 97, here's gold on the weekly. Like I said, it was still up 3.75% for the week off the highs. Again, once this tops, though, I'm looking for this to be, you can clearly count 5 waves here. So I'm looking for this maybe to be a wave 5 of 3. If that's the true count, this won't complete the move in gold, but you would get a nice ABC correction as a wave 3 down here, guys, or wave 4. You can see you got your MACD divergence. So everything's set up here for potential sell-off in gold soon. Again, guys, like I said, long term, it's bullish, right? I expect gold to go much higher. So if we get that nice pullback in gold, I view it as some sort of wave 4. But then I think we go up it again. Probably eventually go to $3,000. Jabber 99 silver, had a low just over a week ago bounce, but it's still technically in a downtrend. All right. Had a nice breakout earlier in the year. Jabber 100, here's SLV on the monthly. Again, broke out earlier in the year in March from this monthly coil. Again, I do believe this will form a higher low, and then eventually it's going to rally up, at least fill that supply zone, if not go much higher. So again, long term, I'm bullish on this area, guy, but cautious short term. Jabber 101, GDX on the daily. Big sell-off here. You got a potential lower high now. The stocks are lagging, as you can see. They're underperforming from the ratio. Here is the weekly GDX chart, flat for the week. Again, you have a possible completed wave 5 here, which means we'd then see a larger ABC correction, okay? But ultimately a higher low. Jabber 103, here's the BP GDM gold miners trading system with the Renko chart. Again, I've been talking about this. This got up to 93% last week with this strong MACD divergence. Remember, these are normalized from 0 to 100%. Okay, it's kind of a contrarian. When they're oversold, you usually get your major bottoms like you had in March there. Up here is not the time to be going swing trade long. In fact, this tends to support that potential wave 5 on the weekly GDX. Following up on some other trade ideas, McDonald's, I mentioned this over a week ago, and it's moved up nicely, McDonald's has. Though I certainly don't like going to McDonald's anymore, not for the health, but it's so goddamn expensive, guys. $15 for a quarter pounder meal is crazy. I remember when they were $5. Next, Jabber 105 NVIDIA, still kind of hanging on here. It didn't fill this gap. It'd be nice to fill this open gap, honestly. Maybe it'll be more interesting. Also, notice the trend line I drew on the RSI. Remember these trend line breaks? So a break of this RSI trend line would also be a valid buy signal. I kept some other ideas on here just because they're still valid. Why? It's never triggered. It needs to go above this downtrend line to trigger. Notice your moving average ribbon's pinching, so it has my interest a bit, and you have 3 waves down. Jabber 107 ACB still in this coil pattern. Jabber 108 KUVE Still in a little base. Again, I didn't bother looking for other trade ideas, guys. Not in this volatility in the markets. Again, we've had some nice trade ideas such as that TMF for the bond for TLT 20-year bonds, as well as things like the TSDD and others, and those have all played out well. Anyway, guys, have a wonderful rest of your Sunday afternoon. Thank you all for all your support. Again, if you're on YouTube, consider subscribing. That helps us out, please. And if you're a subscriber, please, all of you, please like, subscribe, comment. I'm trying to grow that YouTube channel, and it helps the algorithm with the more comments you guys make. So really appreciate if you do that. Have a wonderful rest of your Sunday. Take care.